Hello, everybody. Welcome back to Own It with Rakesh. Today, we are diving deep into a hot topic. Where should you invest your hard earned money? Particularly for those of you in Canada and US, and for those of you who are thinking, is it better to invest here in the US or Canada or in your home country? I'll be focusing on India as your home country, for a lot of the principles will apply globally to any country that you have come from. First, let's talk about the currency rate difference, the rupee versus the dollar. Over the past 10 to 20 years, the rupee has consistently declined against the dollar. This is a crucial information because any investments in India are in rupees, which means they decline in value compared to the dollar over time. Yes, it's very important to consider how the currency itself is growing in a particular country before investing. Now, let's talk about the big monster. Let's consider inflation. In US and Canada, inflation hovers around like 2%, while in India, it's around 5%. This means looking at returns solely on face value might be misleading. Higher interest rates in India might seem attractive, but when you factor in inflation, the real returns might not be as impressive. It's very important that you understand what is the inflation level in each country before you start judging the banks as to what is the percentage interest you're getting out of it. For example, in US and Canada, you might just say that banks are only giving me like 3 to 5% interest rate, but in India I can get like 8% or 7% interest rate if I just put my money in a savings account. But what we miss to understand is that inflation in India hovers at around like 5% or more, which means the value of your money is dropping every day or every year by 5%. But in Canada and US, it's been more consistent. It's been around like 2% annually. So do consider inflation as an important factor in making that investment decision. Okay, we discussed about how the currency itself is growing compared to each other and what is the inflation factor here. Now look into the stock market returns. In India, returns average around like 10 to 15% in the stock market, while in the US it's more around the 6 to 8% range. But again, don't be fooled by the absolute numbers. When you compare the Dow to the Sensex, the Dow has outperformed in 5 out of the last 10 years. Plus, having the higher volatility in the Indian market, it comes with added risk. Yes, don't just go with the absolute value of you will get like 10 to 20% interest or 10 to 20% CAGR or the appreciation in stocks when you put your money in Indian market. Consider volatility as well. Consider which index fund is performing better, which country has the good index fund, and how is it contributing to appreciation or growth over the years. It seems like a no-brainer now. We know that it's better to hold your money in dollars if you're already making and earning money in dollars. Alright, it's just not about where to put your money. Other factor, very important factor that we neglect and that we need to consider this is include that transfer cost. Every time you convert currencies and the added complexity of taxes when you move your money from one country to another, from US Canada to India or from India to US Canada. If you are a US tax resident, filing an F-bar and paying taxes on the worldwide income is part of the deal. Consider that. And also, whenever you transfer the money across borders using a bank or any kind of app, they take a good cut of money as commissions. So even before your money goes to a different country, sits in the bank account or an investment account and grows few percent, even before it reaches that account, it has lost its value because you are paying a good percentage of money as commissions. So do consider that while you are transferring money across borders, especially for investment purpose. Well, the big question, did we really answer where should we invest? Well, the answer hinges on your long-term plans. If you see yourself moving to India in the next 10 to 20 years, investing in India makes sense. It builds up your assets and you hit the ground running when you make that move. When you move to your home country, when you go to India. So it all depends on what your long-term plan is. However, for a lot many of you, if you are planning to stay here in the US or in the Canada, I personally believe it's better to keep your investments here in dollars. The US and Canadian stock market is very well established with a consistent history. The dollar is the world's reserve currency. Making it easier to manage your money in the place where you stay and where you want to grow is very important. I always tell this to my friends and family. They always think that the grass is greener on the other side. If you are in India, you feel that if you're making investments or growing your money in the US, it's better. For people in US and Canada, you feel that if you're making money and investing everything in India, it is going to be better. It doesn't work like that. Grass is always greener on where you water it. So first try to understand what you want in the long term. Where do you want to be? Where do you want to grow yourself? Or where does your family fit in? Where do you want to grow with your family together? Then start watering that. That is where it's going to be greener, not on the other side. Having said all of this, diversification isn't a bad idea at all. India is a rapidly growing economy, and there are ways to invest in it even from the US. Consider ETF like VWO, which covers emerging markets, or specifically track the Indian market with ETFs like iShares Indy. If you find this all very complicated, don't worry about that as well. I have a great solution for you. Just make sure you follow the link that I'm going to paste here on the screen and book a call with us. And I'll help you find a great account, especially if you are in Canada. Don't miss booking a call with me or shooting out a text message about where you want to invest. And I can help you set up the right accounts here in Canada. I can help you set up the right investment accounts as well as the right insurance based products. I'll connect you with the best investment houses. I'll connect you with the best financial institutions for $0. So make sure to leverage my expertise and connect with my team, and we will help you understand what is the best ETF or what is the best index fund that you could invest your money if you are in Canada. Make sure to follow us on Instagram as well at Own It with Rakesh. If you have not already done this, make sure to subscribe to this channel, as you will be getting a lot of good information for free on my channel here, right here at Own It with Rakesh. Like I said, in the end, there's no one size fits all answer. It depends on your unique situation. I have chosen to keep my investments in US and Canada for simplicity and solid returns. What about you? Let me know in the comments. Remember, this is not a simple thing, but it's also not very complicated. And we can help you with that, don't worry about it. Last but not the least, if you found this video helpful, share it with your friends. And thank you once again. See you in the next video. Own your investments, Own where you want to grow your money. Own it with Rakesh.